Congratulations, pre-approved for $40,000 with just a soft inquiry. What's going on, YouTube? Welcome to the Credit Plug channel. So for today's video, we're going to be reviewing a fintech organization that allows you to consolidate your high interest credit card debt into an installment loan, and you can get a soft pull credit offer up to $40,000 with no impact to your credit score. So in today's video, we're going to be reviewing the payoff loan from Happy Money. So this is a personal loan that is designed to help you pay off your credit card debts. Now, one of the issues with using credit cards, of course, is typically the interest rates are going to be much higher compared to personal loans or even personal lines of credit. So if you have credit cards that have high interest, you can consolidate those balances into an installment loan. So basically, you're just taking those balance and converting it from a revolving account into an installment account. Now, it doesn't mean that you don't have to pay it off. It's just you're taking it from your credit card and then consolidating it into a personal loan. And actually, installment loans can be very helpful for you building your credit because you have regularly scheduled payments that are going to be reported to the credit reporting agencies. So this is a great way for you to lower your credit utilization. Now, you still have to be aware of your installment utilization when you take out an installment loan. So a little bit about the payoff loan. It has interest rates that start at 5.99% APR, personal loans between a minimum of $5,000 all the way up to $40,000. And they have terms from 2 years all the way up to 5 years, and you can check your rate without impacting your credit score. As it says right here, checking your rate is free and won't impact your credit score. With a single fixed payment and a set payoff date, a payoff loan streamlines paying off your credit card debt. Paying off your credit cards with a payoff loan can save you thousands of dollars thanks to low interest rates. By paying off your debt with a payoff loan, some members have increased their FICO scores by up to 40 or more points. Now, everyone's experience may be different. Now, how the payoff loan works. So first, they'll take a look at your credit, income, and savings to determine your payoff plan options. There's no consequences or commitments. Next up, you'll choose your payoff plan, and they'll show you multiple options, including the lowest monthly payment, best rate, and the quickest way to pay off. Number three, they'll finalize all legal documents and verify information before dropping the money into your account or paying the credit card company directly. Now, some of the benefits of a payoff loan versus credit cards. So a payoff loan is going to allow you to focus on you and your goals. You're going to have one fixed monthly payment, and it's designed to help you boost your FICO score. One thing to keep in mind, there is a one-time fee. So there is an origination fee charged when your loan is issued. The origination fees range from 0 to 5%, and there's no hidden charges. While most money is transferred to your bank account within 3 to 6 business days, direct card payoff can take additional time. So that's just something to keep in mind. Now, a little bit about Happy Money. So they're not directly funding these accounts. They work with a variety of different credit unions on the back end that are actually originating these loans, depending on where you might be geographically. But they've built a platform. So once you go through the application process, they'll essentially match you with the best rate term based on the information that you submitted. But they are using a network of different lending partners to be able to offer these payoff loans. Some of these you might be familiar with, such as Alliant, First Tech Credit Union, Veridian. Now, there are some specific underwriting criteria that you need to understand before you apply. So in terms of getting approved, they're going to be looking at several different data points. Now, the first one is your FICO score. So you're going to need at least a 600 or higher FICO score. So your FICO score is a summary of your entire credit history. With payoff loan, they provide you your free monthly FICO score as well as updates so you could track your progress. So you're going to need at least a 600 FICO score. Another requirement is that you can't have any delinquencies, right? So 0 delinquencies. Current delinquencies are reflective of payments you owe and have not currently paid. If you happen to have any, we recommend that you resolve these delinquencies prior to applying for the payoff loan. So if you have any negative items on your credit report, delinquencies, derogatories, then you're not going to be eligible. Other factors that they may consider, so your debt to income ratio. So this is a formula that looks at your monthly debt obligations in comparison to your income. So your debt to income compares how much you owe each month to how much you earn. So to be more specific, it's a percentage of your gross monthly income before taxes that goes towards your monthly payments for housing, credit cards, and other debts that you may carry. In addition, they may consider the age of your credit history. So the age of your credit history is the total length of time you've been using credit from the first line of credit to your most recent. They'll also consider the open and satisfactory trades. So these are the lines of credit you've opened and made payments for on time. In addition, they'll consider the utilization, which is of course the ratio of your available credit to the current balances you carry on credit cards. So now once you're ready to apply, you just click this button right here, check my rate. So the first step, you're going to enter in your legal name, no nickname, so just your first and last name. So on the next page is going to ask you to enter in your date of birth. You have to be at least 18 years old, 19 years old in the state of Alabama. Next, you'll enter in your zip code. Now it's going to ask you to enter in your street address. And one thing to also keep in mind is that you want to make sure whatever address that you're entering here is also reflected on your credit report, because sometimes if they're not able to match the address, then they may not be able to give you a soft pull pre-qualification. So just double check on your credit report what address is actually listed. Now it's going to ask you to enter your personal annual income. So enter your individual gross income before taxes. So this is going to be your gross annual income. So on this page, they're asking what's your monthly housing payment. Now, the reason why they're asking you about your income as well as your housing payment is because when they do a soft pull of your credit, they'll see what your monthly debt obligations are, and this will help them with calculating your debt to income. So on the next page is going to ask you how much would you like to borrow. So the desired loan amount can be from a minimum of $5,000 all the way up to $40,000. Now, this is going to vary state to state because some states have minimums that you can borrow, but generally is going to be from $5,000 all the way up to $40,000 max. All right, so on this page, it says there's a credit freeze or security freeze on your credit report. Please read below and learn why you weren't approved. You can come back and reapply after you unfreeze your TransUnion credit report. So they will be using TransUnion. So this is a very important data point. If your TransUnion credit report is frozen, then you won't be able to get a pre-qualification. Now, all you got to do is log on to your My TransUnion credit monitoring. And right here, it says TransUnion locked. All you got to do is click this button, unlock my report. All right. So once you unlock your TransUnion credit report, you can go back and check your offer. Now it says, congrats, select your plan. So from here, it allows you to select the amount anywhere from $5,000 all the way up to $40,000. Now it does give you several different options right here. And these are all going to have different terms, as you can see, based on the monthly payments. The first one, you have 60 months, 48 months, as well as 36 months. Now the interest rates are going to be much higher for the longer term. So the 60-month term is going to have 9.99% APR. And then when you're looking at the 36-month term, 6.99%. So if you want a shorter term, you're going to have a lower APR. However, you will have a higher monthly payment because you're going to be paying back the loan in a much shorter time frame, but you're going to be paying less interest. Now, another thing I just wanted to highlight is the origination fee. So the origination fee is taken right out the top. So as you can see in this example, a $20,000 loan, $500 origination fee. So the net proceeds deposited into your bank account is going to be $19,500. Now there's different origination fees, as you can see right here. So the longer term, from what it looks like, has a higher origination fee. When we're looking at the 36-month term, the origination fee is only $100. So just to recap, Happy Money has the payoff loan, which you can use to consolidate high interest credit card debt. So you're taking revolving credit and converting it into an installment loan with fixed payments anywhere from 24 months all the way out to 60 months. And the interest rates are fairly competitive. If anyone's interested, I've dropped a link in the description of the video. Now you can get an offer with just a soft pull on TransUnion. So keep that in mind. And you want to make sure your TransUnion is not frozen, because one thing I didn't mention earlier is that if you go through the process and your TransUnion is frozen, you unfreeze it and try to do the application again, it won't let you. You basically would have to use a different email address, because the rule is you get one soft pull pre-qualification every 30 days per person per email. So if you want to go through it again, you would have to use a different email account. That's just how their system is set up. Anyways, that's all I wanted to cover in today's video. Let me know your comments and questions in the comment section down below. And until next time, take it easy and we'll talk to you soon. Peace.